877-326-3255. Our guest is David Morgan. He's the publisher of the Morgan Report, and we appreciate having him on. David, how are you, my friend?
Doing quite well, thank you.
All right. Tell us about the Morgan Report.
All right, the Morgan Report is money, metals, and mining. It's a financial newsletter published once a month. It's Internet-based, and I go in and explain why we are where we are, what to expect in the future, and why precious metals, in particular, are your best holdings during such a time frame.
All right. What do you obviously, the big question out there right now is there is what appears to be a rather large and increasing divergence between the futures prices as reflected in spot price and the price of bullion. First of all, are you seeing the same thing we are? And if that's true, what does that mean to you?
Okay, yeah, across the board, pretty much all retail products have got a very large premium on them, whether they're minted from a government mint like Silver Eagles or Silver Maples from Canada. But just like in the 2008 bottom, we saw the same thing. We had about a 30% premium. In fact, you could say there was a shortage in silver products or retail products, but the silver supply chain at the commercial bar level was not that tight. And that's what I've been able to determine again. I know people don't want to hear that. I don't like to say it, but I'm a truth teller, and that's what I've determined. It doesn't mean that at some point in the future it might tighten up even more, but right now the retail products. So what will happen is like what happened last time. I forecast that you'll probably see a narrowing of those spreads over time, and you won't have these huge premiums. So not that the price of silver won't come up, it probably will, but the premiums that you're paying right now will probably go back to more normal premiums over the next couple of months or so.
All right. So even though the people that we talk to that are world-class bullion dealers are saying that they've never experienced a demand like this, even going back to 2008 and 2009, that the demand for bullion is real and it's cleaning the system out. Now, I don't say that to promote gold and silver. I say that because I believe that to be truthful. And if it's truthful, then that has significance to me, because I do remember gold's last huge bull market originated kind of sort of right around the time that you were waiting a month or two for gold and silver deliveries.
Everything you said is absolutely true. And what I'm trying to convey is that it seems as if the best I've been able to determine, is it's a flow rate or production problem. In other words, if you've got an oil well that can only pump 1,000 gallons per minute, it doesn't care how much is in the reservoir. 1,000 gallons per minute is the most you can get out of it. The demand might be 1,500 gallons per minute, but there's nothing you can do about that. And that's kind of the silver supply right now. From what I've been able to determine, the large refineries have silver bars stacked on their shelves, but you can't put them through the system fast enough to meet the demand for silver rounds, silver 10-ounce bars, silver 100-ounce bars, Silver Eagles, Silver Maples, any silver product that you want. Gold is experiencing some of that as well. Mostly it's on the silver side. So certainly the demand is greater than the supply is able to meet at this time. I agree with everything he said, but we have to look at the global picture, and does that mean that there's a true silver shortage, meaning that we got these commercial or 1,000-ounce bars and they can't supply enough into the system overall? And the answer to that, from what I can tell, is no. I talked to one of the largest depositories in the U.S. I talked to one of the largest refineries in Europe, and I've talked to some in Australia. And if they're telling me the truth, it sounds like the commercial side has enough silver to meet the supply. If there were 10 more mints in the country, there were, that type of thing. And you're right. So there is a squeeze going on right now in retail. What I don't want to do is get people excited that this is going to continue 6 months down the road. Could it? Possibly. Will it? I doubt it. Last time this happened was 2008, and it took a couple months, and the spreads came back to normal.
So David, let me ask you this. Whose fault was it in 2008? Was it the mint not accurately forecasting the demand and the mint got behind, or was it truly a supply issue?
Well, it's truly a supply issue. In fact, one of the refiners that I know on a first-name basis stops making silver shots, silver wire, silver extruded products, silver liquids, anything silver that they do on the industrial side. They stopped all of that and started pouring silver 100-ounce bars for the first time and found, wow, this is more lucrative because in the retail market you get a better markup than you get on the industrial side. So the demand was there for retail product, and a basic silver user supplier for industrial forms of silver quit doing that or stopped a great deal of it. and started making silver product that was in the demand, which was 100-ounce bars at the time, and other silver products. So whose fault? I'd say I would reverse that and say who was smart, and it was the silver investors. They saw a huge opportunity to buy silver at a big discount and said, I want it. Unfortunately, the market couldn't meet the demand, so the spread or the premium went up to about 30%. So you were looking at $9 silver and having to pay $12.50.
That's right. Yeah, that's exact. And you had to wait 2 months and hope that you would be able to take delivery of it.
Exactly, and this time could be different. I mean, I've been one of the first proponents that says at some point in time the physical market is going to blow these paper pushers out of the water. And I'd love to be on your show and say it's going to happen. It's happening right now. I'm guaranteeing it, but I'm not. I'm not saying that. It doesn't look from what I've been able to. And I'm connected throughout the industry. Certainly, one of the better connected. I wouldn't say I'm the best, but I'm right on up there.
Sure, and no doubt about that. And I would love to be able to I'm not. Here's the problem. I'm not looking forward to the day that said the gold market has collapsed, the silver market has collapsed, the paper market has collapsed, and the bullion market is off to the races, because that means something really, really bad is happening in our country. That's not what I'm looking for. But that doesn't mean that I'm not going to invest with that ultimate outcome in mind, because I do believe that will happen someday, whether it's tomorrow, a week from now, or a year from now, or 2 years from now. I don't know the answer to that, but I do know that when the average American figures out it's the right time to buy, it will be too late.
I agree, and that's what I want to emphasize. If you don't have any silver now or gold or any precious metals, I think regardless of the premium, you've got to get some, because it is a slight squeeze going on the retail side. And again, who knows? I mean, maybe these refiners that are hunky dory right now might say, geez, you know what, the demand is really picking up, and it's a very fragile market. It really is a tight and small market.
Well, how much impact did that mine that collapsed, I believe it was in South America, was it 16% of the world's production? How much effect did that really have a dramatic effect on the price of silver?
Well, it will have some effect, and I think I don't know, I want to use the word dramatic. The Pascua-Lama mine was huge, one of the hugest discoveries in the last decade, $4 billion already. And a lot of that silver was sold forward. Forward is not futures. They're very similar.
Tell our folks the difference between those two.
Yeah. The forward market is usually through the LBMA, the London Bullion Market Association. It's not really an exchange. And it's over-the-counter derivatives where you write a piece of paper and you're going to buy silver in. You're going to get silver in the future for a price dictated today, and that cash is settled on that date. In other words, you get the money now, but you have to deliver the silver at some forward time. Well, these mines are all built on that kind of financing. So there's probably close to $3 billion of the $4 billion, or maybe all $4 billion, that has promised silver and gold to different bullion banks at certain prices. And that, guess what? It's not coming. It isn't coming. Well, once these bullion banks get a forwards contract, what do? They multiply it into more derivatives. So for every ounce that's coming out of the ground, they play the fractional reserve hanky-panky banking scheme on it, and so it will have an impact. How much, dramatic or not, I don't know, but I do know that it will affect the market at some point in time.
Since we do know that there are forces that compress all commodities, and the monetary forces that can be brought to bear can crush any commodity out there at will, whether it be corn, silver, gold, it doesn't matter. So the question becomes, will there ever become a time where gold, let's say in our practical future, and let's even say a year to 10 years from now, do you think that, practically speaking, that the metals will ever break through and show the currency to be the weak sister that it is right now? Or do you think it'll still always be a push-pull from here on out?
Oh, I absolutely believe that there will be a day that when the paper market fails, that all the suppression that's taken place in gold and silver will come to the fore. It might not be in an hour's time or even a week's time, but it will. So you'll have two prices. You'll have a paper price on the futures exchange, and then you'll have a real physical price, similar to what we're experiencing now. The difference will be that the COMEX will say you can't take any delivery.
Yeah, that's
all settlement has to be in paper.
And you're getting close to that
happens,
now.
It's basically game over.
Yeah.
Then you get to the real price. You either want something that's real, or you either want a physical reality, or a fiat fiction. It'll be that simple.
And I wonder whether the system will blow it up at that time, or just if people will be told paper gold is just as good, and why in the world would you want the risk of holding that bullion? You're going to have to insure it and store it. Why would you want that? They'll keep up the charade, and I can't believe that it isn't happening now, that people aren't saying, if I'm going to buy gold and silver, I want to touch that metal. It's important that I do that.
Yeah, totally agree with you, Dan. It's going to be the spin campaign of all spin campaigns. All the mainstream media is going to be coming out. You're a real idiot if you want to touch what you bought. Of course, the reverse is true. How many people want to buy a car and then just look at it in the showroom window, for crying out loud? And what is happening, by the way, on the gold side is that a lot of this ETF selling, our fund managers have finally woken up to reality and said, I don't want the fiat fiction. I don't want this stock certificate saying I own gold. I want real gold. So a lot of them, even though they're selling off the ETFs, are coming back into the market and buying the physical reality and taking it themselves.
Okay, last question. I got to do this real quick because I'm almost out of time. Do you view gold stocks the same way as you view gold ETFs? Are they both paper to you, or does gold stock have some characteristics of gold buried in them?
No, I prefer gold stocks over ETFs a great deal. It's a real business, and you're part owner in that business. And I think that's it's still a derivative, but it's a real deal kind of thing. You can go walk the land, you can see the gold being poured, and that type of thing. So that's where I gain leverage. I've always said buy the physical first, but the next step up to getting leverage in this market are good, cash-rich, unhedged mining companies. And you can speculate if you want. We look at those as well, but on a very cursory way. I mean, we take a great deal of research, but we don't put a lot of money in them. In other words, bet a little and a lot on the speculation side.
There you go, my friend. David Morgan, publisher of the Morgan Report. You can find him out at silver-investor.com, silver-investor.com. I hope people go out and take a look at it. We appreciate your comments very, very much, David. Love to have you back on soon.
Thank you, Dan. My pleasure.
All right, take care. We're going to be back right after this break with the Mid-Trip Audio Wipe. Don't go anywhere.